Did you know that Warren Buffett, one of the world's greatest investors, sees idle money in the bank as a financial trap? In times of high inflation and economic uncertainty, letting your cash sit idle means watching its value shrink daily. Wealthy individuals don't just save money, they put it to work in assets that appreciate and generate income. In this video, I'll reveal 10 powerful assets that Buffett and other experts consider essential for protecting and growing wealth, even during crises. These assets can help you stay ahead of inflation, build long-term security, and create financial freedom. Let's dive in. 1. Bonds. Warren Buffett sees holding too much cash as a losing strategy due to inflation. While he favors stocks, he acknowledges that bonds are a better alternative to idle cash. Bonds provide fixed income, preserve capital, and offer stability, unlike cash, which loses value over time. Government and high-quality corporate bonds, in particular, offer predictable returns and lower risk. Though they may not match the high returns of stocks, bonds help investors maintain purchasing power and keep their money working, making them a safer choice during economic uncertainty. 2. Dividend stocks and index funds. Warren Buffett considers dividend stocks and index funds far superior to holding cash, especially in the long run. Cash loses value over time due to inflation, while dividend stocks provide steady income and potential price appreciation. Buffett favors companies with strong fundamentals and reliable dividends, as they generate passive income while compounding wealth. Index funds, like the S&P 500, offer diversification, low fees, and long-term growth, making them a simple yet powerful investment. Unlike cash, which sits idle and erodes in value, these assets allow investors to benefit from market growth, reinvest dividends, and build wealth steadily over time. Buffett often recommends index funds as the best option for most investors, as they reduce risk while ensuring strong returns. 3. Gold and silver. Warren Buffett has historically been skeptical of gold and silver as investments, as they do not generate income like stocks or businesses. However, he acknowledges that precious metals can be a better store of value than cash, especially during inflation and economic uncertainty. While cash loses purchasing power over time, gold and silver have historically maintained their value and even appreciated during financial crises. These metals act as a hedge against inflation, currency devaluation, and market volatility. Unlike cash, which sits idle, gold and silver provide a tangible, globally recognized asset that can help preserve wealth in uncertain times. 4. Essential commodities. Warren Buffett recognizes that essential commodities, such as oil, natural gas, and agricultural products, can be a better asset than cash, especially during inflationary periods. While cash loses value over time, commodities tend to rise in price as demand remains steady, making them a strong hedge against inflation. Essential goods like energy and food are always needed, ensuring their long-term value. Buffett has invested in commodity-related businesses, such as oil companies, because they generate real economic value. Unlike cash, which sits idle, commodities and related assets offer protection against currency depreciation and provide opportunities for growth in uncertain economic times. 5. Safe haven currencies. Warren Buffett acknowledges that some currencies hold their value better than others, especially during economic uncertainty. Safe haven currencies, such as the Swiss franc and the US dollar, are more stable than weaker, inflation-prone currencies, making them a better alternative to holding cash in unstable economies. While all fiat money loses value over time due to inflation, safe haven currencies tend to retain purchasing power and provide stability during financial crises. Buffett has historically preferred assets like stocks and businesses over currency holdings, but he recognizes that in times of extreme volatility, shifting cash into stronger, more stable currencies can help preserve wealth better than leaving it in a depreciating one. 6. Intellectual property. Warren Buffett values assets that generate long-term income, making intellectual property, IP, a better asset than cash. While cash loses value due to inflation, IP, such as patents, trademarks, copyrights, and royalties, can provide ongoing revenue with little additional effort. Strong brands and proprietary technology create competitive advantages, allowing companies to generate consistent profits. Buffett has invested in businesses with valuable IP, such as Coca-Cola and Apple, recognizing their ability to produce sustained earnings. Unlike idle cash, intellectual property compounds in value, offering protection against inflation and ensuring long-term financial growth. 7. Real estate. Warren Buffett considers real estate a better asset than cash because it provides both appreciation and passive income. While cash loses value due to inflation, real estate tends to increase in worth over time and can generate rental income. Properties offer a hedge against inflation since housing and commercial spaces remain in demand regardless of economic conditions. Buffett has invested in real estate-related businesses and recognizes the wealth-building potential of owning tangible assets. Unlike idle cash, real estate allows investors to benefit from leverage, tax advantages, and long-term financial security. 8. Cryptocurrencies. Warren Buffett is skeptical of cryptocurrencies, calling them speculative and unproductive. However, some argue that assets like Bitcoin are better than cash, as they have a limited supply and can appreciate over time. While cash loses value to inflation, crypto offers decentralization and a hedge against currency devaluation. Though volatile, many see it as a potential store of value in unstable economies. 9. Rare collectibles. Warren Buffett generally prefers productive assets over collectibles, but rare items like art, vintage cars, and fine wine can be better than holding cash. While cash loses value due to inflation, rare collectibles often appreciate over time due to scarcity and high demand. Wealthy investors use collectibles as a store of value, especially during economic uncertainty. Unlike cash, which sits idle, valuable collectibles can provide long-term gains and serve as an alternative investment for preserving wealth. 10. Business. Warren Buffett believes businesses are far better than cash, as they generate income and grow in value. While cash loses purchasing power, strong businesses create real economic value and compound earnings over time. Whether through direct ownership or stocks, Buffett sees businesses as the best path to long-term wealth. If you found this video useful, be sure to like, subscribe, and turn on notifications to not miss our future uploads. See you in the next video.